Hey guys, welcome to our Apiary Fund Live today. Glad that you could join us. I'm going to ask you to give me a thumbs up or say you can hear me in the little chat window there if you can. Awesome. It's good to see you. I'm excited to be here. We're going to spend about a half an hour or so talking a little bit about the 89 HMA strategy. Now, there's a lot of you that have heard about this, and so I wanted to spend some time talking about the details of it, and maybe if they'll let me come back later, then we will talk more about the actual techniques or some of the additional techniques. They're saying we got an echo, so I don't know. We'll try to get that squared away here. Hopefully it goes away. All right. So what I'm going to do here is I've got a chart pulled up that I'm going to show you here. And we're going to use the hourly time frame. This is the Euro-US dollar, and this is, of course, you can use any pair that you want. Hi, Brad. Let's see. Do we have my chart up here so they can see it now? All right, so let's do this. Now, what we're going to do is I'm going to do an example here using the hourly chart, because I know that a lot of you know that's what I'm using. But you can use this on shorter time frames. And so there's a couple of things here that I wanted to discuss. First of all, this strategy really is based off of the idea that we're going to identify the trend, and then we're going to look for a good time to get into it. So I'm going to draw just on the chart here. So if the trend is moving up, and I'll put a little line on here, and I get a pullback, then what I'm going to be doing is looking for an opportunity to get in as it begins to resume that pre-trend area there. And that's really what this is all about. So identifying the trend, looking for a pullback, and then looking to get in as the price begins to move in the direction that it came from. All right, so with that, I'm going to put on here the HMA indicator. Now, for those that aren't familiar with the HMA indicator, it's the whole moving average, HULL moving average. And of course, it's just like any other moving average. You can set it for different time periods that you want. You can make it shorter if you want it to turn tighter, or you can make it longer if you want it to go longer. But we're going to use the 89 as our example here. Now, this is pretty simple in terms of knowing what we're going to be doing. First of all, if it's red, so a red HMA means that we're looking to go short or to sell, or whatever you want to call it, the pair. So we'll put this up here. And of course, the opposite is true. If it's blue HMA, then we're going to be looking to go long, or we're going to be buying this pair. So a couple of very simple rules in terms of what we're looking for in our trade here. So if we zoom in on this, again, this is the 1 hour chart of the Euro-US dollar. And I'll drop that down. You can see that as of this area here, we turn from being blue to being red. So right now, we're in a red HMA, which means that we'd be looking to go short. Now, because this is an hourly chart, what happens is we get a lot of fluctuations during this 1 hour candle. And so as opposed to a 1 minute chart or a 5 minute chart or something like that, where we're actually looking for the price to swing up and down, we'll get multiple swings. If we looked at the minute charts, we're going to get 60 of the 1 minute candles within this one red candle here. So I said that the idea initially here is that if we're looking to go short, which if this is red, then we're bearish, and now we're looking for a pullback. And so we're looking for a pullback, which would be right here. Now we're looking for this thing to start to go in. Now, if you guys have been following the news, what news just came out? What news just came out at the top of the hour that caused some of this movement? In fact, I'm going to go ahead and drop this down to a 1 minute chart just so we can see this. This little movement in here was caused by what? Anybody know? If you do, type it in there. But there was some news, and so we have to take that into consideration, right? Whenever we're trading, whatever the strategy is, if there's news that comes out, we can expect to see some added volatility. Yeah, so the FOMC is what I was referring to. Released their minutes from their last meeting, which can always cause some fluctuations in here. Okay, so this chart, I'm going to pull back up the 1 hour chart. Again, we've got the 89 period HMA on here. And we're looking just for opportunities to trade in the direction of that. Now let me clear this off so that we can see this. So what we have as an example here, again, pretty volatile in the movements. You can see this was a few hours ago where we had some big movements coming down here. And we ran back up to this area here. Now we've got some fluctuations on this, and so I'm going to just, for the fun of it, put a order in here. We're going to sell this. And you can see the lines coming up here. I'm hoping that you can see this. We've got a yellow line is where we got in, and we've got the green line, which is where our target is. Now on here, this strategy is specifically a scalping strategy. So we're looking for 3 pips, and then we want to get out of it. The 3 pips, and the concept or the philosophy behind this is that on an hourly chart we're going to have a range, and maybe the range is 30 or 40 pips for that 1 hour candle. And in that 1 hour candle, if it moves 30 or 40 pips up and down, what we're going to see is 3 pip segments of that, right? Where it moves down 3 pips. And so by going in the direction of this 89, what we're saying is that there's a high probability, or a higher probability, that we're going to get a 3 pip drop in this. And that 3 pip drop is going to allow us to get in or get out of that trade really quickly. We'll watch what happens with this. Okay, so there's a couple of other things that I want to talk about here, and this is something that is important. And as you test this, and by the way, let me just say, if you try to trade something like this, you've got to make sure that you practice it and you test it out, because there are some things that you need to learn, and you really won't learn them until you go through the process of actually taking some trades on here. So a couple of things to look for. One is if the price is above the moving average versus below the moving average. Now let's flip over to another pair. Let's go to the pound yen just for the heck of it here.
Could you answer that question?
So Georgia peach. By the way, I love peaches. It's springtime. I'm ready for some peaches. The question is, does this strategy work with all pairs? Now, I trade this with all pairs, and I'm going to show you in a minute kind of the process that I go through when I'm trading this, and I'll show you how really I use all of the pairs on here. Some people have talked about this as the shotgun strategy, and the reason is that we are going out and we're looking at all 27 pairs that we have, and we're looking to take trades on there. So we may be running with 10 or 20 or 30 trades going on at one time. But the answer to the question is, yeah, you can use this with any pair that you want to. There are a couple of things that you want to take into consideration is the spread. So if we're looking for 3 pips, and we're looking for a spread of 2.5, then that doesn't leave us a whole bunch. So we need to keep that in mind. All right, so this pair right here, this is the pound yen. And you can see that we've got a blue HMA, which means that we would be bullish. And so, in fact, we were bullish really for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. We're in our 9th hour here of this being bullish. All of these candles are above the moving average at this point. And because of that, I can take a couple of different trades. One is I can take what I call a fade into this position, meaning as the price begins to move down. So for example, we had a down candle here, we had a down candle here, we had a down candle here. I would be looking for opportunities to buy into these pullbacks. So this is an area where it's pulling back. Now remember, at the beginning I said that if the trend is up, I'm looking for pullbacks. And so here, the blue line represents an uptrend, and these candles represent a pullback. So those are areas where I would look to fade into this position. The other areas that I'd be looking to get into this is when price begins to confirm the move up. So we got a green one here, a green here, a green here. So any of these candles, as long as I'm getting them as they start to pull back on that candle, I'm going to look at that as an opportunity to enter into the trade. Now this is an example of when the price is trading above the moving average. All right, so above the moving average. If the price was trading below the moving average, then I would only take trades in the direction of the indicator, the line here, the HMA line. And let me see if I can show an example here. We'll come back into this area here. So, for example, as price started to trade above this line. So in this case, the HMA line here was moving down. We had our pullback, kind of ran back up, but now this candle here is actually trading above the moving average. So when it's trading above the moving average, I'm not going to take a trade until I get a down candle or a candle that's confirming the direction of this moving average. So that if the HMA is moving down, I need to have a down candle. So in this case, I could have looked at starting to take short positions here again. But if the price is above this, I'm not going to do that. Same thing on if it's an uptrend here. And you can see here that we moved down below. So we're trading below it here. I would have to have a green candle that tells me it's okay to get back into that trade. All right. Okay, now what we're trying to do here is we're just trying to simply get 3 pips on this movement. Now, if we're in a trade, let's go right to here. Let's say that on this part here, let's say that we enter into a trade right here on the right-hand side of the chart, and I'll put a box around here. Okay, so if we entered in long on this trade here, and we move forward, well, we've gotten our pips there, but if we didn't, and this starts to turn red right here, as soon as that starts to turn red, that's when we have to exit out of this trade. Now, one of the biggest issues that people have with this, and not just with this strategy, but any strategy that people are trading, when they get into trouble, when they have those big moves that go against them or those big drawdowns, it's because they didn't get out of their trade before or when they should have, right? When the signal tells them to get out, they hold on to it hoping that it's going to come back down again. And if you do that, and if you start to try to be long when you go through a big downtrend like this, you're going to have a hard time. So it's going to be at these changes that you're going to take your losses, like any type of a strategy that changes. You're going to take your loss, and you're going to redirect what you're doing in your trading and be able to trade as it moves down here. So John says green above the moving average. So for example, if the moving average line is blue and the price is above it, I pretty much can take any pullback. But if the HMA is blue and it's below the moving average, then I'm only going to take a trade if the candle is green. So we want to make sure that we're only taking directional trades that are confirming the direction still when it's below that line. If it's a red moving average and the price is above it, then I only want to trade when I have a red candle here. And so those are some distinctions that you want to make, because we know what happens if the price begins to trade above the moving average. So let's say it was moving down and it starts to trade above it. We know that that's going to be the first sign that the trend overall is beginning to change direction. So not waiting to get above. Yeah, so we don't have to wait for it to go above the line. Now let me go back to our example here where it was below it. So we don't have to wait for it to pop up above it. So we can still take trades on the opposite side of the line as long as the candle is showing us a bullish movement. Now remember, the philosophy behind this is that we're going to get 3-pip movements all the time. And so those 3-pip movements can happen whether we're below the line or above that line, but our probabilities are less that or higher that we're going to get a change once the price moves below that line. So the blue line tells us the direction that we're going to trade. How we're going to trade it is going to be determined where price is either above or below the moving average line. If it's red, it's going to tell us we're going to be bearish, and if it's below that line, then we're going to take any trade. If it's above it, we're going to wait for a candle that confirms that direction or is moving in the same direction of that. Got that, John? Okay, perfect. Ivan, it's good to be with you too. All right, so the 89 HMA strategy is basically a scalping strategy that's used on an hourly chart to enter into a trade after a pullback, after the pullback. So here's another example of, this is the pound yen. And if we were to look at this for a potential trade, we would have an opportunity to get in here right now because we're in a blue bullish situation. And we're getting a pullback. So in this case, during this pullback, I can go ahead and I can enter into the trade. So I'm going to put a buy here just so that we can watch this. And the idea would be, because this is bullish, that the bulls are going to have control and are going to be able to push this up or down. Now, just as a matter of management here, we want to limit what we're doing in terms of how many positions we might trade. So I may take 3 trades on any one pair that I have. And so in this case, if this continued to move lower, which it's starting to pop down again, I could add a position onto here with the expectation that the bulls are going to be able to come back in and push this up. Okay, so now let me just kind of show you what I do in terms of my routine when I trade this. So I always go to the very top or the very first pair here, which is going to be the Aussie CAD. And let's clean up this so we get rid of some of these lines. There we go, and remove those. So if I was to look at this particular trade, this pair right here, I would say that it's bullish because I've got a blue HMA, but I don't quite have a pullback yet. So what I'd be looking for is price to start to pull back here. And so we had a nice little run up, but we don't really have a pullback here. So we want to make sure that we get that pullback. Then I would go to my next one, Aussie Franc. So this goes kind of to the question about, do I trade all of the pairs on here? And the answer is yes. So Aussie Franc going to be very similar. As you start to find, trades on all of these Aussie pairs, you may find that you want to limit it to, 1 or 2 of the pairs that have the Aussie dollar in it. Again, got a little bit of a pullback. I would have looked at getting into this on this red candle here, but now that we've already moved up, I'm going to hold off on that. Here's the Aussie dollar. So this Aussie dollar's ran up pretty good here. You can see that we've had our movement up. And now we're getting a little bit of a pullback. So I could enter into this trade on that pullback. I have a 30 pip stop loss that's running in here. I don't ever get stopped out in that 30 pip because I'm going to get out generally before that. So that's an emergency situation if that actually happens. Now, it takes about 10 or 15 minutes to go through all of these the first time. And after I go through all of these the first time, then what I'll do is I will see, first of all, how many I have filled. I will then go back and look at if any were closed out. And then I will go back and do it again and continue to do that over and over again. So here's the CAD yen. We have a downtrend. It's red here. And we've got a pullback. In fact, that pullback's came right up to the line here. And so I'm going to go ahead and short this. And again, just looking for 3 pips with my 30 pip target, or 30 pip stop. Rick says they all have morning stars on them. I don't specifically look for that, Rick, but that's certainly something that as you identify a pattern like that, a price candle pattern, then you certainly could use that as a way to determine whether it's a good time to get in or not. So that's certainly something that you can add to that. Now, because I'm doing a lot of trades on here, and I may do 200 or 300 trades in a day scalping this. You can see today that this pips today is from 8 o'clock last night. And so it'll run a total here, and it'll also run some drawdown. And so you have to recognize that that drawdown is going to be in there because most of the time you're going to get a 3 pip target and then you're out of it. But if it starts to move against you, you're going to have to hold on to those for a little bit. So as long as the moving average is still moving in the direction of what I initially entered, I'm going to hold on to that position, allowing it to move in my direction. This one here is a little bit too big of a move down, and I would look at a pullback here before I got in. John says, you didn't mention what does trigger your stop loss. So the stop loss is going to be a manual stop loss to where I get out once the initial setup has switched. So if initially I'm bearish and I'm shorting, as soon as that changes to being bearish, that's when I'm getting out. So even though I got a 30 pip stop loss on here, very rarely is that going to come into play, meaning I'm going to generally get out of this before that's going to get hit. Here's a Euro Aussie. You can see we're quite a bit of ways away from that, so I would wait for this to pull back. Euro CAD. Biker says, have you tried this on a longer term chart with a larger take profit? No. But I don't think it's a bad idea, because really with this strategy, and most of the strategies that we talk about are based off of these core principles. You know, what is the trend? Where is support and resistance? And so while I call this the 89 HMA strategy, that's really not that relevant in the overall scheme of what I'm looking at. I use it to kind of give me an initial heads up in terms of what I'm doing. But if I didn't have the 89 HMA on here, I would still be able to look at the price action and say, okay, it's in an uptrend, I'm looking for the pullbacks, and I'm getting in. So we want to recognize that the key elements of this are still going to be the price action and what's happening with that. So how many positions, Doug, at one time on one pair? I would keep it to about 3. So I don't want to go more than 3, because what I'm doing is I'm going on other positions. So theoretically, I could go on, and let's say that I started at my Aussie CAD and I go down through all of the pairs. There's 27 pairs. Well, if I did all of that, at the end of that, I could have 27 trades going on. Now, if you're just starting this, I would probably limit it to 5 to 10 trades and start to practice managing at that. But there'll be times where I'll have 30 positions going and won't even think twice about it, because I know that I'm capturing those pips as it's coming in and it's getting me out. Now, the question that a lot of people ask is, well, what if you did a 10 pip target or a 20 pip target? Could you do that? And you probably could set it up to have a more traditional, where you're putting a hard stop, a hard target, where you're looking for a 2-to-1 reward to risk ratio. And then again, this is more with the idea of scalping on the 1-hour charts on here. Let's see. Bridget says, what happens if the take profit or stop just happens to happen at maintenance from 3 Mountain Time to 3:09? Then sometimes the take profit stop will not happen. Or should we just watch the charts during these hours? Yeah, so typically what I'll do is at that 3 o'clock time, when it goes into maintenance, and really until 4 o'clock Mountain Time, 6 o'clock Eastern, you've got those wider spreads and things that you have to deal with. Typically, it's not going to impact this, but I'll still keep my positions in. I won't make really any adjustments to that. At least I haven't had to have a need to make those adjustments at that time. So I don't do anything when it comes to that maintenance time. Georgie says, so you have to watch instead of setting a take profit. Nope, so the take profit's 3 pips, right? So, for example, here, this is a blue line. I've got a green candle here. I can buy this, and what happens is you'll see it pop in my take profit right here, which is my green line. I know it's probably kind of hard to see, and then the red is my stop loss area there. Yeah, so if I wanted to go down and let's say that we looked at the 1 minute chart here, could we use the same thing? Could we continue to look at this? And the answer is yes. And whether we use an 89 or we want to make some other adjustments that you think might be better for that, the concept is still we're looking for the price to move in one direction, up, and then a pullback, and then we get in as it begins to move up again. Here you can see that we had a nice little pullback and it started to go in. I would probably manage it a little bit different on a 1 minute chart in terms of how I entered into it, because I'm getting one new candle every minute, and so there may be some adjustments that you would want to take with that. But typically on the hourly chart, I'm not looking at anything but the 89 and just the pullbacks on the one candle time periods. Okay, let's see. What is the highest ST regularly that you do manually when the market goes against your setup? I'm not sure exactly what you're asking, Ivan. There's the ST. But I will, this strategy, you will hold some drawdown on here, because you may be in a bunch of positions that haven't turned against the trend, that are just still in that pullback. And so for me, what I'm most concerned about is whether or not the change in that HMA has happened. Once that's happened, I know that I need to make some changes and look at exiting out of those positions. If I do that, then I can start to trade again. And what happens, and this is kind of a good example here. This is the pound yen again. And you can see that it was red from about here down to kind of where we're sitting right here on the right-hand side of the chart. So if I was to have traded this, and this was over the period of roughly 50 hours. So that's a long time, 50 hours on here. What would happen is during this time, if I was looking to capture 3 pips, maybe I could have captured 3,000 pips here. Could have done 1,000 trades where I did 3 pips each on this. Now it sounds like a lot, but you can do a lot of trades in 50 hours here. So if I would have got, we'll say 2,000 pips during this time. What we need to be able to do is when this starts to change direction, is say, okay, well, I'm going to take a 100 pip loss and get out of it. Well, I made 2,000. I took a 100 pip loss or a 200 pip loss. I'm going to be okay with that, because I know that I'm netting out positive pips in here. The hardest thing for people to do is to take losses. And if you've traded for any time, in the Forex market, you know that it's easy to hold on to those losses hoping that they're going to come back. So we've got to be able to get out of those losses when they do happen. All right, I'll try to answer some of these. I do keep the same lot size, Bez. Sammy says, how much heat will you take in one day? 1, 2, 3, before exiting. So what I look at here is down here at the bottom, the daily return. Once that gets down to about 1.5% to 2%, then I'm going to start to look at, do I need to exit out of some positions? Do I need to lighten up what I'm doing? Did I hold on to a position that I shouldn't have held on to? What I found by trading in the direction of the trend, in this case, using the 89, as long as I stay in the direction of that 89 and get out when it reverses, typically I'm not going to see that big of a drawdown. But 1.5 to 2%, I'm usually thinking that there's something going on. I need to check it, and we'll make sure that I'm in positions correctly, or that I didn't miss something. That's a great question. What would you say this strategy's average win rate is, at least in the management of my trade? So Dave, if I could pull up and show you the last 100 trades, and it may be when we pulled it up this morning, it was the last 100 trades were 100 winners. On average, if you went back over the last 1,000 or 5,000 trades, you're probably in the 90% win ratio in that range, because you do have a ton of wins. You do have some bigger losses. So for those of you that are in the the B line, you have to be careful because we want to make sure those average when the average losses are correct. But you do take some bigger losses because you have to get out at the time. So what would happen is, let's say that I picked up, 500 pips each day for the week. So I'm up 2,500 pips on the week. At the end of the week, I may have 500 in drawdown. I would take that drawdown and net out my 2,000 and just be happy with it. Let's see, Howard, do you use a MACD for confirmation? No, not in this, I don't. Although, again, we can use this as a template. We have to be careful, though. The more that we add, the more complex our decision-making becomes. And so, for me, this is a simple way to just look at it and say, I'm looking to buy, I'm looking for the pullbacks, and I'm good. So, Ivan, again, the stop loss, I don't change. I'll keep it at, 30. And as long as it stays trading in the right direction, I won't get out. Now, let me just say one other thing that I do that helps with some longer-term positions. So, we sleep sometimes, right, at night. So when I'm going to bed or if I'm not able to watch the market, what I will do, let's say that I was getting ready to go to bed here, and I've got my positions in here. I would say, okay, where's my stop loss? Well, right now the stop loss is right below this swing low, so I'm going to be okay there. But I'm going to adjust my my targets up so they equal the amount of risk that I'm taking. That way, if it does go on a little bit of a run, I'm able to capture a little bit more with that. So at night or when I'm not watching it, I will look at doing a more traditional stop and target with this. Let's see. Taz says your change of color is approximately 3 candles behind. Could you make it 1 candle difference between the change of the color and the reversal? Yeah, again, some techniques in there you certainly could add. I find that as I try to tweak things too much, it doesn't necessarily make the overall outcome any better. So maybe on some of the trades it works out okay, but in the end it may still be the same as if I just followed the rules that I have, which is what I'm generally finding. Brad says, my drawdowns using this in the last couple of weeks is less than 0.25 of 1%. You are always taking wins. Because you're always taking wins with the pound, I use 4.5 take profit. Okay, so Brad has been trading this and making some adjustments. And so that's really the key, guys. And there's not too much more than this. We can go in and we could look at a lot of different what-if scenarios with this strategy. But the idea is if we can use an indicator like the 89 HMA to tell us the direction that price is going, right? So if it's blue, I'm buying. If it's red, I'm selling. And then recognize the strength of what that trend really is. The old saying, the trend is our friend. That's what we're really trying to use, is the idea that the trend is going to continue to move this in the direction that we want it to. And all we're looking at is a small scalp from that. 3 pips. If you wanted to do a little bit more on some of them, you could certainly do that. Timmy the genius. So talk more about the price pulling too far away. So this is a somewhat of a discretionary type of a thing, but the way that I look at it is if I look at it and I say, wow, that's kind of far away, then it's probably too far away. So you could go in and you could pick the pair and you could maybe come up with a number that said, hey, if this pulls away, X amount of pips on this pair on this time frame, then I'm going to hold off on taking the trade. So you certainly could do that. I haven't done that. I've more eyeballed it to say, okay, if this thing is really ran up and there's been a strong candle, I'm going to expect a pullback. And we can see multiple examples of that. Preferably, I would like to take trades as they're closer to the HMA line than further away. All right, guys, thanks for coming. This has been awesome. It's been fun to get together with you. Hopefully this answered some questions, or at least piqued your interest in using a strategy like this where we're taking advantage of the strength of the trend, looking for pullbacks, and getting in and capturing a few pips in our trades. So with that, I will wrap it up. Go ahead and like this. There's a little thumbs up button there, guys. If you'd hit the thumb up on that, we would appreciate that. And then we will be doing this again another time. And I look forward to maybe being back with you at some point. So thanks, guys, and have a great rest of the day.
This episode of YouTube Live is brought to you by Trader on the Street, a channel to help you learn how to trade. Click in the link in the description to help you learn more.